Okay, now for the next activity, I'm actually just going to share with you my actual 20 stocks in my watch list for this month. Okay, of course, not stock tips. End of the day, you know, out of these 20 stocks, you will choose 5 of your favorite stocks. Okay, 5 of your favorite stocks. And then, okay, next month, we will deep dive into these 5 like what we have done this round. Okay, so hopefully, you know, every session you will have better understanding of 5 stocks and, you know, have some stock ideas for the other 21. Okay, make money, be happy, do something. Thank you so much, Melvin. Thank you. Okay, so when I actually created my watch list for this month, okay, the 20 stocks, I on the assumption that I already have these stocks in my portfolio. So these are all the stocks that which have discussed previously in February. The 5 stocks we actually look at is this 5: UOB, OCBC, CapitaLand, ST Engineering, XTMX China. Okay. Then of course these are the 5 that we discussed today: Raffles Medical, Capricorp, Yangzijiang, AEM, Capital Pacific. Also, I'm assuming that I already have these 10 counters when I create this list of 20 stocks in my watch list. So that's the assumption. Okay, so of course I use the top-down approach. I want to look at what are things what the investment team first, THEME. Okay, then I go and drill down what are the stocks that will feed the team. So of course now the stocks are not obviously cheap now. It's actually getting a bit more difficult to find. So I am now focusing on these 3: steady dividend yield, still can find but not much; growth business. So I believe there's still some business is growing. And this round I decided to do a little bit of gambling. Okay, this is purely gambling. So every year we have about 5 to 6 stocks whereby, you know, they become multi-bagger. What's a multi-bagger? 1 bagger means double. Okay, 2 bagger means the stock increased by 2 times. 3 bagger means the stock increased by 3 times. Like for example, last year in 2020, the top stock was MedTech. MedTech. It actually went up by, okay, let me just show you all. MedTech. So you can see it actually went up from how much? Okay, about 10 cents all the way to 150. So it actually went up by 15 times. This is a 15 bagger, we call it. Okay, so of course it's not easy to get them. How I wish there's a formula for me to actually find the next multi-bagger. We can't, but to me, I always want to, you know, place a small bet. So that's why I call it a bet. Okay, to see whether I got a chance to pick up the next multi-bagger. Okay, now for steady dividend yield, I'm looking for things above 5%. Okay, I want the yield to be at least 5%. So of course I have this REITs fair yield. Hopefully you all know where to get this. Okay, let me show you all. Financial Mall. Okay, you all should have access to this. For those who still don't know how to get in, so later end of the session, I'm actually going to do a demonstration how you actually gain access. So maybe you want to stay back a little bit. So you just log in. I've already logged in. You go to membership under EMEAN Investment Club, view. Okay, view again. There's this thing called U. This is where I calculate my REITs fair yield. My REITs fair yield. So this is updated for this year. Then I just compare with the current yield. I go to REIT data and compare the current yield. Now, if the current yield is higher than fair yield, that means the stock is cheap or expensive. Current yield higher than fair yield, that means the REIT is cheap or expensive. Anybody can share, please? Current yield higher than fair yield. Okay, thank you so much. So that's what I did. And Based on this, I still can find two REITs above 5%, current yield higher than fair yield. Okay, these are the two, 6.3 and 5.1. So of course, I haven't do any in-depth studies about this company yet. I'm just forming my watch list. Okay, company-wise, there's this company QAF that do gardenia bread. Yeah, gardenia bread, 5.1%. Okay, so this is the three stocks I have put my watch list because of steady dividend yield. Okay, now, so growth business, I have identified a few areas of growth. One is the real estate. So if you have been following the real estate market, the real estate is actually still quite buoyant. So throughout the COVID-19 period, actually the real estate price didn't go down. They are actually still quite buoyant, and this year we actually do expect the prices to keep going up. So in fact, we may even be worried that there's more anti-speculation measures to control the prices. So generally speaking, the real estate market has been well. Okay, at the same time, of course, all the nations, they have been doing stimulus packages, a lot of liquidity flowing into the economy. So unfortunately, every time you have liquidity flowing in the economy, it just get channeled to a few individuals or a few distinct group of people. Okay, after all this stimulus package, the rich will become richer. Okay, that's how it works. That's how it works. At least historically speaking. So real estate, a luxury product, I do think that this year still have a lot of rooms to grow. Especially we are looking at Singapore is going to attract, in fact, more Chinese going to come to Singapore. You have been reading the news. We have a lot of Chinese companies, large Chinese companies want to use Singapore as a HQ for their global business or overseas business, they call it. Okay, like for example, Alibaba, the Ant Finance is here. If you talk about SEA is here. If you talk about TikTok, it's actually here. ByteDance, thank you so much. They're actually all here. Thank you so much. So I do expect real estate and luxury goods to actually do well. Okay, thank you so much. Okay, so for real estate, I actually pick up a few companies. So Gokaland. Okay, how this attracted me is because one thing is actually the price to book is still very affordable, 0.44, very cheap. Okay, the other thing is Gokaland actually has one project now selling. Anybody can name the project now? Gokaland is actually now selling one project. In fact, actually sold quite well. Thank you so much. Midtown at Bugis. So the price has actually climbed up a bit. I think there's more room to go. 0.44. Hong Kong Land is actually one of the largest real estate company listed. And I don't know why the PB is forever so low. 0.32. I think that's quite obscenely low. And if you actually look at the property, it's actually very decent properties. Hong Kong Land. Our business by location. Okay, so you are talking about, like, for example, Marina Bay Financial Center, One Raffles Quay. What is this? Okay, One Raffles Link Mall, under developed properties. Okay, Leiden Green, Margaret View. Okay, so you're talking about quite good end property. Of course, they not only have property in Singapore, they also have properties like in all these places. Okay. Thailand, Vietnam, so on and so forth. Like for example, those in China one, like the Hong Kong one, they are actually very established properties. You can take a look. Okay, all these properties, and now they are only trading at 0.32. Okay, I'm not sure why, but if you ask me, I believe the company is undervalued. When you will go back, to be very frank, I waited for some time, and I'm actually still quite bullish about it. If you actually look at the prices. There was some price movement recently. I went up recently, it came down. I got a feeling it can continue. So anyway, the main reason why I see is actually undervalued. Of course, if you think this is of interest, later you can vote one as one of your favorite counter. Okay, UIC, same thing. UIC actually owns a lot of very established building in Singapore. Okay, I can show you. So by the way, UIC is related to the detergent. Okay, not joking, this one not joking. It's actually related to the detergent company. For those old enough, you know what I mean. Okay. Where is it? Okay, let me go by from the stock reader. UIC. Okay, so again, you can see some of the developer companies are finally having some action already. Valuation 0.5. As you can see, our main business was detergent. So it was actually related to detergent. Then of course they actually went into real estate. Hey, what happened? Okay. Okay. So you can see they even own like SJAC Center, Clifford Center, Gateway. So these are some of the buildings they actually own. Now at 0.5, I'm not sure whether that kind of valuation is justified. Okay. Propnex is, as you all know, property agents. They go by transactions, commission to transactions. And I believe this year the transaction is actually going to remain healthy. So I do expect their commission to be actually good. So this company, I think it's worth pay attention to. Okay, the other thing that besides real estate, I think the other thing that this year is going to do well is the luxury products. So that's why I highlighted Hourglass and Cortina. Okay, I make a guess. During COVID period, for Hourglass and Cortina, did their profit go up or come down? Make a guess. Okay, they sell luxury watches. I'm quite sure you all know your Rolexes, your I don't know how to pronounce properly, Philippe Petit, or I don't know what you call it, or AP. Okay. So you can see that, yeah, thank you so much. In fact, their profit went up despite they talk about whatever crisis or whatever you call it. So you look at Hourglass. Yeah, Rolex prices went up. Okay. Okay, you can see that net income after tax. Can you see? This is for Hourglass. Okay, COVID, no COVID, still must look at time. Cortina. Okay, can you see? Yeah. So they're just something about watches. There's something about watches. So that day I caught a joke. Why spend so much money to buy expensive watch? Joke. Because they say that means my time is more expensive than yours. So anyway, okay. I think with all the liquidity flooding coming in, like I said, unfortunately, most of the time the money will just channel to a few people, and all these luxury products they just get more and more expensive. Yes, I think I read a report recently. Rolex has actually doubled. The price of Rolex has actually doubled compared to, I don't know, 5 or 10 years ago. I don't know. Unfortunately I don't wear a Rolex. So anyway, this is my choice for growth, real estate and luxury. So these are the stocks I have sort of filtered out. Okay, manufacturing. So I actually have found a few manufacturing company. Again, same thing. In fact, not just last year, but their profit has been going up very nicely. Okay, the other thing is this negative net debt. Okay, negative net debt. Okay, let me explain what is it again. Like for example, Sunningdale Tech. Sunningdale Tech. Okay. Okay, when it's negative, what does it mean? Sum of all short-term debt, notes payable, long-term debt, equity minus the total cash and equivalent and short-term investment. Okay, so basically your debt minus cash is negative. Okay, that means you have more cash than all the debt. Okay, that's what it means. Sunningdale Tech, okay, apparently it's not delisted yet. Is it delisted? Okay, it's not delisted yet. Okay, it's actually still here. So you have, if you take your debt minus cash is negative, that means you have more cash than debt. That's what it means. Okay, so they are very cash rich companies, and you can see their profit has been going up. Net income after tax, okay, has been going back up. Okay, so that's how I choose the company. I actually go for negative debt. Okay, they are manufacturing company, and they are increasing profit. So let's say, for example, look at Fuyu. Okay, so despite COVID, their profit actually went up. That's how I actually choose all these company. And again, same thing. You can see here. Okay, negative net debt. That means they are very cash rich. So for example, for Fuyu and for Multicam, in fact, they actually have been giving consistent dividends. So the rest doesn't mean that it doesn't give dividend, but it's not consistent. So these two, Fuyu and Multicam, they actually give consistent dividend. So that's how this list of stock actually got chosen. Okay. Okay, the other growth business. Okay, so the growth business I actually break down to three parts. Of course, real estate luxury. This is because I think the rich going to get richer. They're going to spend money here. Manufacturing. Okay, why I actually have this, because more because of increasing profit. So these are the companies whereby over the past few years, 3-4 years, their profit has been keep increasing. Okay, especially last year, despite COVID, the profit increasing, and they have negative net debt. Okay, so if you ask me, manufacturing is not very exciting, not a very exciting industry, like just more of the increasing profit that caught my attention. Okay, and the other is healthcare. Of course, healthcare is always a growing business to me, and to find company with increasing profit and negative net debt, I only find these two companies: Singapore ONG and Tianjin ZX. So Singapore ONG is a gynae, okay, a medical group specialized for women. And Tianjin ZX, yes, no need to guess, Chinese company, Chinese pharmaceutical, but then of course they have very nice profit growth. Maybe I can just show you. Okay, you can see from the net income after tax. Okay, the profit has been increasing very nicely. Yeah, that's how it caught my attention. Singapore ONG. Net income after tax, so the profit has been slowly climbing up. So this year there's an impairment loss, but if not, you can see that profits have been slowly climbing up. So that's how I actually picked these two counter. And lastly, these are my bet for multi-bagger. Okay, these are my bet for multi-bagger. Oh, thank you so much. Sunningdale has been suspended since 8 March. Okay, thanks for the information. Also, maybe later we will take out Sunningdale. Thank you so much. I had an oversight. Okay, apologize for that. Okay, so how I actually chose these three company, again, I use negative debt. So basically, if if this company don't perform, I know that they won't collapse. So frankly speaking, if you have more cash than debt, okay, you're unlikely to collapse. Okay, so like I said, these three stock is really to sort of like try my luck to see whether they can come multi-bagger. So Fortress Minerals is actually into mining. So as you know, mining, once they actually found something, their price can move up quite interestingly. Or is it Fortress Mineral? Sorry, Fortress Mineral. Yeah. So you can see that, yeah, they may not have they may not pass my 6 tests. But this one, you can see the last 2 years that profit actually go up. There may be a slight chance that it can continue. I don't know. So like I said, if you want to have multi-bagger, these are the risks you have to take. This is Fortress Mineral, of course, into the mining business. Then Samudara Shipping is a shipping company, as the name implies. Okay, I think why I chose this is also because their income is increasing. Okay, no, but like I said, luck. Okay, this is the part I use a bit of luck. Then Secura. Okay, why I chose this is because it's actually in a security industry lah. So you can see, of course, as we go along, we actually need more security services, and they do provide things like cyber security consultancy, homeland security products. So if you ask me, it's a growth industry. It doesn't pass my 6 tests. Okay, in fact, you can see they can making losses, but it seems that last year it has actually some profit. Can it continue to grow? Not too sure. The other thing about this company that caught my attention here is this: they have been getting some security service contract, as you can see here. 10.7 million security service, 13.5 million security service contract. If we compare that with their revenue, let's see. Okay, 33. So if these two add together, is already about quite close to yeah, okay, so not really, quite close to 1 year of revenue already. I'm not too sure. I'm not too sure. Okay.